Hey guys, what's going on? It's Lewis here, and I'm coming to you from my new studio. I hope you like this new setup. I think it's pretty cool, and that is one reason why I haven't been posting too much lately, is because I've been moving. So I'm finally settled into my new place. Pretty stoked about that. And now I could start making a lot more content, which is awesome. Also, the markets have been pretty much down only and just absolutely terrible over the last couple months, and over the last couple weeks it's been down and sideways. So not much action going on in the markets, not much that you could really do, not much that you could really trade, to be honest. Personally, I basically just cut off all of my trades and just put up a couple bots that I made, which are just doing, 2-3% profit targets, and those have been doing really well. But of course, not sure how long that could last, but it is nice to have another tool in your arsenal if you want to learn about bots and stuff like that, to use them, similar to how I'm using them. I actually have a 3 or 4 part series on that on my YouTube channel. So I'm sure if you just type in Lewis Raskin bots or Lewis Raskin 3 commas or trading crypto bots, Lewis Raskin, my name, then you'll be able to find that series. And that teaches you everything that I know about bots and how to create them using the software that I use called 3 commas. So that's pretty much all that I've been doing. Along with that, I've been dollar cost averaging into Bitcoin. I also think possibly dollar cost averaging into Ethereum might be a good idea. But when it comes to altcoins, I really haven't been doing too much with them. I sold off pretty much all of my positions. I still hold a little bit of, things like Quant and things like Sand and things like KDA and Engine and some stuff, but it's really negligible based off of my total percentage of my portfolio. And so I'll go a little bit more into detail on what my current portfolio is in a future video, but right now it's very, very little altcoins. It's mostly Bitcoin, or actually it's mostly USD. And then there is some Bitcoin, some Ethereum, and then small amounts of altcoins. But I'm really just trying to trade the ranges and not get too caught up thinking that there's going to be some major melt up or anything like that anytime soon. I'm sure eventually there will be, but I'd rather be safe than sorry, and try to protect as much capital as I can right now until I think that there will be another opportunity. And what I am noticing is that there are some people saying that we might, move up significantly, or the bear market might find a bottom or something like that. One thing that I will say in this introduction is that I really don't see us having a V-shaped recovery anytime soon. Possibly we'll get a big pump up, but literally all of the pumps that we get, even if we see a 200% pump from here, I still believe that we will be in a very prolonged bear market for a long time. So far, stocks have crashed, crypto has crashed, but the real estate market has yet to crash, and it is going down. And home sellers are reducing their prices for the first time in years drastically. Inventory is going up drastically for the first time in years. So I think that the housing market will actually take a very big hit, and I am reading as much as I can right now. You see some books behind me. I'm reading as much as I can about real estate, because I really want to potentially scoop up many properties that are going to be, being sold for very cheap, very, very cheap, because the homeowners over leveraged, or they bought it with money that they can't afford, and now the price of the house went down too much. All these other reasons, so I'm looking into that a lot right now to prepare myself for potentially 6 months, a year from now, if there is a very, very, very steep curve in the prices of homes. Because I think that that with the interest rates going up the way they are, that the prices of the homes simply can't stay up. You can't have super high interest rates and super high home prices. So that's one thing that I'm really focusing on in my personal life. Other than that, when it comes to the markets, as I explained to you earlier, mostly in USD, all in USD in my trading account. I'm putting on very small, very, very small short positions in my trading account and just taking my profits very quickly. I'll go more into that later. But right now, I think it's time to go into the market update. Also, I will definitely be putting timestamps in the description now for you guys, because I know that you have been telling me to do that for a while, because these videos go on very long, and I could either put the timestamps in, or I could simply make different videos. So maybe I'll, make shorter videos, but it's sort of hard to make shorter videos like this when I'm just doing my analysis, and my analysis is pretty in-depth and it takes a long time to do. So we'll see what happens, but I will at least start with the timestamps. And so with saying all that, let's get into the video and start the market update. Okay, guys, so we are here and we're going to start off doing the fundamental analysis that I always do, going over all of the fundamental stuff. So we're going to start off with the CBBI index. This is the crypto Bitcoin bull run index. Going to reset the not the chart, but basically the page right here. You can see it's at a 9. So let's go down and check it out. Well, the 9, obviously, that's pretty darn bad. You could see right here, bad or good, either way, because you could see that it's below 10. It's in the dark green, and down here, or actually right here, you could see that closer to 0 is the darker the green color. And the darker the green of the color is the closer it has been to the bottom. So you can see that was the bottom down here in 2019, in 2018, and in 2015, it was down here. Dark green was a great time to be averaging in and to be buying Bitcoin. So according to the CBBI index, right now is a really good time to be averaging in to Bitcoin. Maybe it's a good time to be averaging into alts. I cannot say that right now. However, as long as this is, what it is, potentially it might be a good time to go into Bitcoin. So that is the CBBI. Now let's go on to the MVRVZ score. If we take a look at this, we go down, you can see that it is in the green. The green zone has, historically speaking, been a great time to average into Bitcoin. You could see starting in 2013, it hit the green zone back right at $5. And even though it went all the way down another 50% to actually more than 50%, it went underneath that to $2.28. It was still a historically, obviously now in hindsight we know, but it was still historically a great time to buy, even if it didn't reach, $10,000 or $60,000 or $70,000. At that time it was historically good to buy, because just a few months later it ended up going well above $5. Up to, well, not well above, but it went up to $6. $7, and then eventually, of course, it had the next bull run where it went up to $133, and then eventually $1,000. So that was number one right there. The first time it went green. The second time it went green, Bitcoin fell to $361. $326, and that, honestly, that wasn't the best time to buy. Right when it went in to the green, you could see that right here, but it hit $326, but then Bitcoin went down from 326 all the way down to 268 to 254 to $211. So the bottom was 211. So that's pretty bad. It's actually not as bad as it was from 5 to under $2, and where's the low? Right here, $2.28. So actually, looking at this now, just look at this logically, okay? As soon as it hits the green, that doesn't mean that that's the best time to buy. What I'm saying is, as soon as it hits the green is the best time to start dollar cost averaging. And the first time, the good time to dollar cost average happened from the green was 9, 9, and then 10, 11, 12, 1, 2. So that's 6 months, 7 months, 8 months, 9 months, 9 months. So you had 9 months since it hit the green originally You had 9 months to continue to average in and get lower prices once it hit the green on the MVRVZ score. Okay, that's number one. Number two, right here, second time it hit it. It hit it on 10-4, so 10, and then, excuse me, it hit, yeah, 10-4, so 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8. That's 9, 10. So when did it start? 10, from 10-10 to 10-10. So the 12 months, an entire year. Yeah. So the first time, what did I say? 8 months to average in. The second time in 2014, you had an entire year to average in. What happened the third time? Third time it hit the green was back here, 11 November of 2018. So you had 11, 12, 1. So you had up to, let's see, where was it? Right here. And then it was $4,300. $4,300. So you basically had up until 11, 12, 1, 2, 3. 5 months? You had 5 months since it hit. So this one was 5 months. The one before that was an entire year. And the one before that was, what did I say, 8 months, something like that. So it just hit the green. And right here, this is an anomaly with the Black Swan event of the COVID. So, you know, it's not the case right now. Right now, we're in a bear market. Things are going down drastically. There's nothing that's saying that we're gonna turn around, or and it's not that you want to get in when the good news comes, because by the time the good news comes, it's too late. But there's nothing that I could see right now that would warrant any type of turnaround, any type of V-shaped reversal, or, you know, move up right now. And so we hit the green last in June. Yeah, so we hit the green in June. So it's been a month. We've been in the green for 1 month. That's nothing. That's nothing. So personally, if the MVRVZ score hit the green, you know, we still have a long ways to go. A long ways to go. I think that it's going to continue to go down, and I think it's going to continue to go down pretty significantly. Yeah, I could see it going down a lot more. Anyway, maybe that's my bias talking, but that's the MVRVZ score. All right, so now let's go on to the R-HODL ratio. So R-HODL ratio, very obvious. Red is sell, green is buy. So the R-HODL ratio actually is not in the green zone yet. So this has not hit the buy. And once this hits the buy, it would be really great, but it still hasn't even hit the buy zone yet. This hit the buy zone in almost 2 months, or almost a month and a half after the other one, the MVRVZ score hit the buy zone, or hit the green zone. So you could see back in 2018, it hit it in November, right? So November is where the MVRVZ score hit, but the R-HODL ratio hit the green in December, basically January. So this is a month and a half after, but this still, you know, actually when this hits the green, when this hit the green the first time in 2012, price soared. When this hit the green again in 2015, price still went down and sideways for quite a while. When it hit it again in 2018, that was more of a bottom. That was definitely more of a bottom. So the R-HODL ratio is a better bottom indicator. When this hits the green, it's closer to the bottom compared to when the MVRVZ score hits the green. Okay, so moving on, we're going to the Bitcoin Rainbow price chart, and you can see that it is in basically a fire sale area, which has historically speaking been an amazing time to buy. And so this is just another confluence on dollar cost averaging into Bitcoin at these levels. So that's why this is just another reason why I'm dollar cost averaging into Bitcoin. Of course, some people will say or can say, well, it went above this chart back here in 2014. And it also went below it back here in 2020. So why can't it just go below it and this model totally fail too? And I mean, it can, but there's models, and you have models for a reason. Like you either rely on the models or you don't. And this is in confluence with the MVRV score and the CBBI and possibly some other indicators as well. So this is, you have to take it for what it's worth, and I'm taking basically a fire sale as a great buying opportunity for averaging in to Bitcoin. And now we have the Bitcoin Fear and Greed Index. It's currently out of 14. This doesn't really tell me anything right now. For me, if it's under 15, the first time that's under 15, I buy it. But then if it's consecutively under 15, which of course it has been for a while, then I don't buy it anymore. So it's really like a one-time thing and then resets once it goes back above 15. So, and then the other time I buy is only if it's under a 10 after it's been under 15. So if it's under 15, it goes 14, 12, 11, 14. I don't buy based off of this. I don't use this indicator. It would only be if this goes below a 10, then I would buy it. Otherwise, or I would buy it again after I already bought it once it was under 15. So this doesn't tell me anything. Okay, so I have we just went over the fundamental stuff. Now let's go over the total market cap, of altcoins, the total market cap of DeFi, the dominance level for altcoins, the dominance level for Bitcoin, and then obviously Bitcoin and Ethereum against Bitcoin, and then the DeFi in general. So total market cap. Let's start off here. Okay, so on the monthly chart, this right here, 579.91 billion, that was the 2020 and the 2020 close right here, and then obviously the 2021 open right here. So last month, the price of crypto came down 759, and it came down to 762. So it never hit this level right here, the 2020 and 2021 close and open / the 78.6. This is also the 78.6, as you can see right there, which is a really good level to bounce off of. So this area where it bounced off of, I mean, yeah, I guess, like, I get it because, like, it's very close to it. Maybe if we go into the weekly, I mean, it bounced off of here to the left, nothing really to the left. Well, okay, so let me do this. Let me put this right here as this line, excuse me. And this line right here is at, let's make it orange, 764. That's the low. So 764, what was the high? 761. So it didn't reach the high of 2018. It didn't reach the low, the open and close of 2020. It didn't reach any of that. It bounced. I guess it got front ran. Well, not I guess it got front ran and then bounced up higher to stay above the 200 weekly MA. Let's see. This is blue. This is the MA. Yeah. So the 200 MA is right there. So let me just make sure that is what it is. MA7, it's blue. MA7, 3, 4, 5, 6, 7 is blue. That's 200. So this is the 200 weekly MA, and it's trying to stay above the 200 weekly MA. That's what the total market cap is trying to do right now. So potentially get a long trade in to go long on coins. From the 200 to the 100, 200 to the 61.8. If you take the Fibonacci from the top to the bottom, then the 23.6 is right up here, which also lines up with the 61.8. So this area, like, but like, I don't see this happening. Like, I don't know. I just don't see it happening. All right. So that's the total market cap. Let's go to the total altcoin market cap. We have basically the same thing going on. Went down, tapped the 200. This one did not come back down and close on the 200. The total did. You could see it tapped it, came up, and then last week fell back down to it, and now it's coming back up again. So it's hovering above it. Everything else, like basically the altcoins, fell to it, tapped it, jumped back up. Did this one get the 78? No, this one did not get to the 78.6, and it also did not get to the close of 2018. So same thing. It front ran it by a little bit, and now it's, moving up a little bit. This wouldn't be like, this area right here would be the area that I would prefer to buy. Like right here. This is like the buying area. Actually, damn, no, like the 78.6 is the buying area. Like this whole area is the buying area. Like not, I don't know if we got front ran or whatever, but this is the buying area. And then this is the second buying area. And then this right here is this is like, okay, just buy it here. Like at this point, just buy everything down here, This is what you gotta do. Let me make this a little bit more clearer so people understand it. And then I'm just gonna say, just buy here. Just buy whatever you want here. Yeah, that's pretty much it. All right, so that's that. And you know what? Let's just go down into a more smaller time frame. And just do a quick, TA right here of this. Oops. Resistance. Support. Well, I mean, yeah. So now we're in this little zone right here. This is the big zone that I want to hit to go in, right? And yeah, it was just front ran. It was, I mean, did we hit it? Like this is 759. This is 706. No, this is 759. Yeah, no, we front ran it. So by $3 billion. Anyway, we have the support here now. We have the resistance here now. We're right in the middle. We're literally smack dab in the middle. Can we get a pop up? Sure. Why not? We might get another pop up, but it does look like we're going to get a pop up, but it's risky. It's definitely risky. Like this right here, June 30th would have been a good time to go into crypto for a trade at this level if you were to get lucky and get in literally at the bottom, like right over here. So yeah, it didn't even hit the daily. Like, so give me 1 second here. Yeah, going down to the 4 hour, it didn't even hit the support on the 4 hour. So we're at mid resistance right now. So it's either going to do a little pop up and then, smack down, or it, just fucking zoom all the way up and then smack down. Or is crypto, just beyond all odds. But I don't see that happening right now. Last time what it did was it fell and then went above it, fell back below it, tricked everyone else, and then shot up. So this is very, very difficult, very difficult to trade. This right here is easy to trade. It hits the support, excuse me, hits the resistance, falls below it, and then retest it as resistance. You get in your shorts, and then, you know, it falls and you target down here, right? Or even up here, easy. Comes up above it, okay, you're screwed. It falls back below it, okay, boom. Enter your short right here, stop limit right there, and then you ride this down to down there. So right here in the middle, it's like, what do you want to do? Well, most of the time it follows the bigger trend, which of course the bigger trend is the downward trend once it hits the middle. So I don't know, buying is pretty tough right now for me. I'm still gonna hedge my shorts with some longs, but I'm gonna have to look at some other things. Let's go to the total 2. It's probably the same exact thing, I bet. Go to the daily. This one makes absolutely no sense. This one makes 0 sense. What is that? This is like, okay, so you put that there, and then as the resistance, you put that there as the support. Busts up, fake outs above it, and then doesn't even reach the support. This is why trading could be real bullshit sometimes. Like, this is okay, but your take profit would be down here, and it didn't even, like, it hit here. So it's making a higher high from back there, higher low, and then a lower low, higher high, and then a lower low. And it's probably, I wonder if it's 61.8. Falls below the 61.8 too. Like, this is weird looking. Okay, so this is altcoins right here. This is the altcoin dominance. This is what I don't understand. Altcoin dominance, you know, rose to 60%, and it's just been hovering up here for months and months and months and months and months since May of last year. Despite the fact altcoins are down 90%, altcoin dominance is still up, which I don't understand how that makes sense. Like, how does because the altcoin dominance should go down with the entire market, just like how it went down with the entire market in 2018 and 2019. Altcoin dominance follows the market. So the fact that altcoin dominance is still so high, I don't like I feel like they're getting their data from something that doesn't make sense, because the altcoin dominance should be much lower given the fact of how far altcoins have fallen in comparison to Bitcoin. But maybe there's just so many altcoins at this point that altcoin dominance is just going to continue to stay up, but I don't believe that. Okay, so let's go to the weekly and look at this. So I figured out, I paused the video, this is actually the next day, but I paused the video and I figured out the reason why this is so high, despite the fact that altcoins have gone down so significantly, like 80–90%, is because this is now taking, or this is taking into account stable coins, and stable coins have risen so much and they've taken over so much of the market. Go on CoinMarketCap. What's the top, 10, 12 coins? Like 5 of them are freaking stable coins. So that's why this is so high. It's not realistic, because stable coins take up way too much of this, of this altcoin market. And so if we look at the Bitcoin dominance, it's at 43%, but realistically, take the stable coins out, it's probably around 50%. In order to understand that, you'd have to see what the stable coin dominance is. So if you type in dominance in TradingView, you could see that USDT and USDC are there, and obviously Bitcoin, Ethereum, and others, and then just all of these. I don't even know like what the point of having all of these different dominance levels in here are, but if you click USDT, like what's the dominance? You know, it's taking 7%. Okay, so look at how much it's risen since 2018. So before this, the dominance levels were so much more accurate, because now 7% of the dominance is just USDT. And what about USDC? 6%. So let's add 6% and 7% and say that's 13, and then plus 0.4 plus. So let's say 14. We have to add 14% to the Bitcoin dominance percentage. So realistically, it's more like 47.47. It's more like it's 47. It's more up here right now for the market cap for Bitcoin dominance. That's going to be so annoying. Either way, you can't. What am I supposed to do? Just add. Okay, so I add the 14%, so it's up here, or I go into this chart and I subtract the 14% from it, so you know it's really down here. Like that doesn't fall in line with the chart. Like when you look at charts, you look at the charts. You know, you don't alter where it is. That would be altering everything. So yeah, do the dominance levels even matter? Of course they matter. Look at when the top was. It was when it hit the major resistance back here. That was the first top, and then actually second top somewhere in November. I mean, it basically hit it. Things started going down. Yeah. No, this is oh my gosh. Dominance levels are definitely less. I mean, I'm still going to use them, but I guess the weight that I used to put a lot of weight into dominance levels, but I guess the weight, I'm going to have to put less weight into them. I'm just going to look at them and be like, this is, I'll still play them. I'll still play off of them. But it also doesn't make sense. Like, we should have gotten up here with all of the altcoins and with all of the USDC and USDT and stuff like that, all the stable coins being in the altcoin dominance, or so. It's a little tough. Yeah, I mean, I'm still gonna use it, and if it comes down to the 61.8, I'm still gonna go in all in. If it comes down to the key levels, I'm still gonna use it. Same thing with even the DeFi dominance chart. Like if any of these things come down and hit these major levels, I'm gonna use it, because you should. Anyway, let's move on to Bitcoin now. So actually get into the literal coins. Okay, so now we're going into Bitcoin. Let's start off on the monthly. So on the monthly, we had 1, 2, 3 down months, 2 up months. 1, 2, 3 down months. I'm not saying we're gonna get 2 up months now, but that's just an observation. So yearly open and close for 20. Actually, let's start on the yearly, to be honest. That might be better. Where is it? Here it is. Yearly open close is down here at $14,050. Or no, excuse me, 13,769. So this is the yearly open close for 2017, 2018, right? And we have not reached that level yet. If you're looking at the yearly chart, that's what I would really like to look at. Let's bring this like this. I mean, it never came down to the previous yearly top or bottom. So you don't have to use that as a, that's just one thing to look at. The thing that I'm really looking at though is this. It's like this previous cycle, top to bottom, right there to there, from the top of 2013 to the bottom of 2015 was minus 85%. Okay. This one, the next one was minus 82% from the top of 2017 to the bottom of 2018, or the bottom of 2019. It was minus 82. So minus 85, minus 82. And right now, we're at minus 75 is so far, but we're only at minus 70 right now. So we hit minus 75, let's say minus 80, or even minus 78 brings us down to the $15,000, $14 to $15,000 range is that 80% off. And that is really close to that $13,800 yearly open close. Plus, do I have the Fibonacci in here? Yeah, plus the 78.6 right here is 17,000. We haven't reached that yet. And that's actually the monthly candle wick. So I would love to see this get hit. The only thing that Bitcoin has going for it right now is the fact that it is bouncing off of the 200 weekly moving average. So if you go to the weekly, this is Bitcoin. Actually, oh, never mind. It's not. The total was bouncing off of the 200 weekly moving average right there. Bitcoin fell below it. The good thing about Bitcoin falling below the 200 weekly moving average is that every single time that it does fall beneath the 200 weekly moving average, that's always the best time to be averaging in. So just how I explained in the beginning, now is the best time to be averaging in. Like, best time underneath the 200 weekly moving average in March 2020, hitting the 200 weekly moving average in December, in 2018, in 2019. Like, the 200 weekly moving average underneath that it has historically always been a really good time to buy any asset that is has long-term potential. So I'm continuing to average in every week. As for trades go, I would need to dial it in to get a little bit more clarity into the actual trades. All right, so for the actual trades, let's go, we have the weekly. Let's go down to we have the monthly. Let's go down to the weekly. Weekly for Bitcoin, what do we see? We see, okay, back here, the weekly top was right there. So let's just call the top, call the top 19,378, all right? So that was the previous cycle top. Check, right? Check. Cool. So this is a very, very, very significant area. This is absolutely a significant area. Is $19,378 dollars. Yeah. Okay. So I paused the video and I started thinking a lot. One thing that I am thinking is that $20,000 is the big support, right? Or it's a big psychological number. And psychological numbers are huge in crypto. So as long as Bitcoin is over 20K, I sort of like it. does that mean that I think that it's going to jump up, up super high? I'm not entirely sure. No one knows, but I do like the fact that it's over 20K. So psychologically speaking, we have that as a plus for it moving up. Then the other thing that is happening is that the merge for Ethereum is set to go on August 2022. So just yesterday, Ethereum merge moves one step closer following the Sepolia trial run. Just one more testnet merge to go, says developers. So just yesterday, Ethereum testnet Sepolia moved over to proof of stake from proof of work. And only one more testnet remains before the entire network completes the merge. The merge is a long-awaited update to the Ethereum network and is expected to happen this year. And from what I heard, it's expected to happen in August. So there's the buy the rumor, sell the news thing. And so this article, I'll just read it for you. It says Ethereum is one step closer to the merge. This long-awaited move from proof of stake to a proof of stake blockchain. And its testnet, Sepolia, executed its own merge and made the switch to proof of stake. A testnet, short for test network, allows those using a blockchain to try out the new tech before it launches on its main network and undergo, the upgrade. So it's literally like testnets. I'm not going to go into it, but it's pretty obvious. They test the hypothesis that what Ethereum is trying to do, right? And so this testnet, this merge went really well for the testnet. So it's probably going to go really smooth for Ethereum. And buy the rumor, sell the news is such a powerful thing. It's like crypto runs on narratives, right? So if Ethereum, the biggest cryptocurrency in the world other than Bitcoin, is having the biggest thing happen to it, its price is probably going to go up. Yeah, so it's supposed to happen August, maybe September, possibly October. But according to all of these articles that I've been looking at, it's really like, it almost seems like a no-brainer, to be honest, that the merge for Ethereum will send the price higher. I mean, $20,000 Bitcoin, $1,000 Ethereum. These are two very, very big psychological numbers. So let's just, let's bring this to $1,000. Like, these are two extremely big psychological numbers, $1,000 and $20,000. So I don't know. I almost feel like there's a lot to say about technical analysis, but the psychological aspect and the narrative, they play huge roles in crypto and in trading. So if you use them, some people don't use them at all. Some people only use technicals. So, I mean, looking at the technicals, wait, we didn't finish Bitcoin. So with Bitcoin, let me see if this one is less. Yeah. So this one is here's the yearly open and close for 2017, 2018. No, wait. This is the yearly open close for 2017, 18 up here. This one must be, let me go to the 12 months. Yearly open close. This one was, this was the yearly open close for 2017, 2018. Okay, I get it. This was the yearly open close for 2017, and we already went over that, so we don't need to really do that. So let's go down to the monthly. Going down to the monthly, what can you see? You could see that, 2020. Oh, let me actually put this. Yeah. One second. Okay, cool. Now just to make sure we got that down. Monthly, there's nothing here. Literally monthly, there's nothing here. This is what I'm saying. Monthly, the only thing that's here is that there was the tippy top tip of the month monthly right there. That's all that we have on the monthly. And this right here, and this. Okay, so sure, this one and this one, this monthly close and this monthly high, but not so much on the monthly. But on the weekly time frame for Bitcoin, underneath the 200 moving average is where you average in. It's a good time to average in, and hitting that weekly high, that's pretty good. The daily, going down to the daily, conforming, constricting everything. We have this bottom formation right here. Okay, so we have the bottom and we have the top of this range. We have the bottom of the range, we have the top of the range. Okay. So yeah, the two big areas are 21,500 and 22,900 on the daily. Those are the big resistance areas. Like, now the question is this, do you want to sell? Under normal circumstances in downward markets, yeah, you do want to sell, because, and especially you want to sell breakouts. So this entire area between 21,000 and 22,000 is technically speaking a shorting area, because this is a breakout, and it's usually a false breakout of this range, right? So we have the overextension, and then the top, the bottom, and now we're going back into the top. And most likely, not most likely situation, but what happens a lot is that it comes up, does some type of manipulation to reel everyone in, and then falls back down. So that's a possibility. But with the fact that the merge is coming, that's really big. Now the question is, does the merge outweigh the global macroeconomic situation? That's another huge question. Well, all that you really know is if you want to trade it, which is what I'm doing, is like just simply trading it. This is the support, this is the resistance. That's all you know. So technically speaking, this right here, right around this area, this entire area is a shorting area, and it would really have to get above, it would have to go above 23,300 about, in order to invalidate this thesis that this is a range and we're going to go back up. Because if you look left over here, there's nothing over here. So if it pumps up above here, probably want to be long, because you have a 14% move minimum, not minimum, but 14 to 18% move to the upside from here, if this is the, if it does decide to pump. But these two areas are areas to take profits. And to be on the safer side, you could actually move this up here from the mid, from like right around here, thinking that this is going to be like a breakout, a fake breakout to a fake breakdown to a breakdown. You could move this up here. You could essentially also target or do a breakout at maybe 21,800 up to 22,900-ish, 22,800 for like $1,000 move, which is around like 4 or 5%, right? The thing about that is that that's a breakout play, and I absolutely hate breakout plays, because this right here was a breakout play, right? And of course you would have gotten stopped out immediately on the next candle for maybe a loss of 3-4%. So breakout plays are really, really difficult. I don't like them. I prefer to actually fade the breakouts at this point. So I would rather do that. But shorting at these levels, it just doesn't seem like the highest. It doesn't seem like the best thing to do. I would probably I'd probably wait to short up here at 22,800, something like that. 22,800. That's where I would probably short, to be honest. And because if we're going to, yeah, like if we're still going to be going down, then it would go down from up here. It's just the closer we get to August and September and October, the closer we get to the merge. And the closer we get to the merge, the more hype around it becomes, and the more people want to buy it. So I don't even want to look at Bitcoin. I want to look at Ethereum. I want to trade Ethereum because I think Ethereum is the play. So if you look at Ethereum, let's just look at Ethereum real quick. Okay. Let's go to the daily, right? Well, let's go to the weekly first. Okay, so looking at Ethereum, one thing that I noticed is if I go to this chart, go to the weekly on Ethereum. Well, there's two things that I noticed. Two things I noticed is that the weekly high from 2018, which is, I count this high, not this high. I count this high to be the weekly high. It rejected off of it once, twice, and now it's on to the third round. It's tapping it at 1245. Right now it's at 1230, but close enough, you know. The other thing is that it hit just around the 78.6, which is usually a really good buy zone, is the 78.6. So hitting the buy zone, the merge, and the fact that it's on the third tap of this, if we go to the daily, it fell below it, tapped it, fell below it, tapped it, fell below it, tapped it, and now it's on its way back up. That's pretty, oof. I don't want to say it's bullish, but it's a little bullish. So going back to this chart, if you look left, you could see that there was consolidation right here as well. Top, bottom, first top, a little fake out above it, below it, above it, and then the top became the bottom to move on up. So we had the fall, top, bottom, same bottom, same top, just about same top, just about the same bottom, and now just about on the same top. So if this does what this did, then we should see a move above it, followed by a move below it, followed by another move back above it, followed by this. So it should look something. Oops, it should look something, like this, a little bit cleaned up. But yeah, that is what Ethereum is looking like right now. One thing, the other bullish case for Ethereum is that on the daily chart, Ethereum versus Bitcoin. So this right here, resistance, big resistance right here. First support, then resistance, and then a little bit of resistance. Well, it just went above it. The volume is so low, though, that it's like, is this real or is this just another fake out? We need to wait 5 hours, at least I need to wait 5 hours until I could know if it's going to close up here. If this closes here, then that's good because all of these were just wicks, while this one's an actual close above this previous resistance. And it would essentially be a breakout play of this, triangle. So I would probably want to play something like this on the Ethereum against Bitcoin chart, and Ethereum would outperform Bitcoin. So we have a couple situations for Ethereum that are happening. Yeah. Okay. So after thinking about it and just thinking about it more and more, I'm pretty confident that Ethereum is going to go to 1391. That it's going to or 1400, because it's like, I think there's too many factors behind it. There's too many people on the sidelines. I think it is due for a bounce. It's been down only forever, and at this point, what else is there that's going to happen? I'm not sure. I mean, there's always something, right? It's the bear market. There always seems to be something that comes out, but FTX, Sam Bankman-Fried, really seems to be stepping it up and basically like saving everyone. Sort of annoying because Solana was was this my ideal buy zone for Solana down here? Hold on a second. I didn't realize that I actually had that as my ideal buy zone. I thought my ideal buy zone for Solana was like 25 or something like that. Either way, damn. Hold on a second. Maybe it was 22. 22, 27. It's up 50% right now. Absolutely savage. So, yeah, I like Solana. In fact, I like Solana. I like Ethereum. I like Ethereum the most because Ethereum is coming out with the merge. Let's look at Solana against Ethereum. Wow. Okay. So, June 13th. Solana is up 50% against Ethereum. So, Solana against Ethereum is doing very, very, very well. And this was the main. Okay, so maybe I should go into Solana instead of Ethereum because this was the main, support for Solana right here. Broke below it. So it's like, okay, where's the next support? Well, next support was 78.6, which was right here. And this became the new support. And then it busted through that with, you see, this is what I'm talking about. It busts through it, retests it, and then zooms up. And now it's back and retesting it, but it hasn't fallen below it. So Solana looks to be like a better play than Ethereum does, to be honest. But Ethereum has the merge, so, it has that narrative around it, why people would want to buy Ethereum. But just looking at the charts themselves, Solana definitely looks like it's ready to do something more. I mean, this was absolutely an insane run up. So I wonder why. Either way, I like Ethereum. I like Solana. Yeah, I mean, Ethereum up to 1400 for sure. Maybe, possibly 1600. But at least 1400 for the time being before probably a potential pullback. So, yeah, I'm in Ethereum right now, and I will probably just hold it. Yeah, the merge, it's too powerful. It's so powerful. I'm in Ethereum. I'm in ETH. So we got that. Solana, I just showed you Solana might be a better option than Ethereum because of the way that it looks, but Ethereum is still really good. Okay, so one other thing that I'm looking at, which I don't know if I even mentioned this, but it's the Ethereum against Bitcoin chart. So, oh damn, are we not closing here? I thought we were closing here. All right, so this right here is the Ethereum against Bitcoin chart, and 4 hour, it hit the top of the 4 hour chart, but I look at the daily on this, or at least At least the 12-hour. Whoops. Hold on a second. 1 second. I need to make sure the alerts. No, delete this. Okay. Go back in here. This to me is, this is bullish. I mean, it's an ascending triangle, right? And that makes me think Ethereum, that everything, the only thing that I don't like about this is the fact that it's wicked into this resistance and or has this resistance, but I don't know. I'm long biased. $20,000 is a long, and you know, I'm thinking the bounce from 20K upwards is going to be pretty big. We got a huge candle today. This was probably the biggest candle so far, 6%, nearly 7%. So, and there's still 4 more hours to go. So yeah, Bitcoin could have these huge candles. That's why I'm scared to short it. And so with saying that, I think the best move is to be long bias as long as we're above 20K and the ETH merge is on its way. I think those two factors are, and we're above $1,000 on ETH. I just think that those two factors are really important for crypto, and it doesn't really matter like what the macro environment is as much. So that's why I'm going to just continue to buy. And yeah, it looks like, hold on a second. Looks like the S&P 500 is, you know, bouncing really well, which is the big reason why Bitcoin is probably bouncing. But I don't think the regular markets, I don't think that the regular markets are over in terms of I don't think the markets are done going down. I think it's going to continue going down. And that's the scary thing, is because if the regular markets go down, Bitcoin's very correlated to that, you know? So it's like Bitcoin's going to go down. But right now Bitcoin is, I don't want to say it's printing, but it's doing pretty damn well. So heavy volume, or I guess I'm just going to wait. Yeah, I'm just going to wait. I'm not going to short it anywhere down here. I'm going to wait till it comes up to at least 22, 23, somewhere up here. Yeah, look at that. We're not even stopping. Yeah, we need to be long ASAP. This is like just continuing. Oh, I mean, this is a huge fucking candle. This is really big. This is almost the biggest candle since back here. So this is probably the breakout. Like usually you don't really get a chance to catch it. So if it does come back down, that would be a great longing opportunity. But I don't know if it really will come back down, to be honest, because the 4 hour, okay, so the 4 hour just closed. Now we're on to the next. So we'll see. We had, I mean, huge candles usually result in the price coming down at least a little bit. So I guess we'll see what happens. But things just, to me, right now seem very, very, very bullish. Way more bullish than, maybe more bullish than they probably are. But yeah. Yeah, okay. So I honestly need to do other things. I need to do research. I need to do way more than what I'm doing right now. to get an even better picture of the markets. So basically I explain like my bias right now and what I'm doing, but I need to look at a lot more factors and a lot more, like so many different news stories are coming out. There's a black swan event of freaking Mount Gox giving 150 Bitcoin to people and them selling it. There's so many different contrarian things happening right now that this is hard as hell to trade. But if you're gonna trade it, I mean, the only thing I could really say is you need to have your risk defined and don't over leverage or use leverage at all, and stay within your risk parameters. So let me get this one up on YouTube, right? Once I'm done with this, I'm gonna just be finished and just chill out for a second, because things are going way too quickly right now. And I don't know, maybe it's the coffee or something. There's a lot of anxiety lately that I've been having, but I'm going to be going through a lot more charts and a lot more resources, a lot more, like I have my trading cheat sheet down here. And honestly, it's like, I really feel like the vast majority of funds should be allocated at this point, not the vast majority, but the majority of funds should be allocated at this point to the investment portfolio that averages in, because that tends to outperform. And then once the market goes crazy, then trade it, right? Or once there's a very clear picture, then trade it. But the picture is so unclear right now because we've dropped so much, but the macro environment is still bad. I don't know where the bottom is. I think the bottom is still, I think we still have a long ways to go until the bottom, to be honest. But no one knows. No one knows. So that's all. I just have to say, you can go wrong, dollar cost averaging, so not financial advice, but I really think that just averaging into positions into Ethereum and Bitcoin every week is a solid game plan. And I don't see why there's a real need to trade. Like, I don't need to trade. Like, I don't need to trade every day. And trading every day is stressful as hell. But I'm going to be definitely looking at the markets every day, and I'm going to be trying to make little update videos every day. But like, this is difficult to trade. Like I've always said, like in the very beginning, this was easy to trade. Even from here to here, buying this was very easy. Okay. And then from here to here, once this broke, selling this was very easy. Like, but once we hit 30K, like buying here was easy, selling here was easy. But then once we got to here, I don't know. Like, I thought that this was going to be the local bottom, but it didn't. It fell out. So now we're down here. And I mean, obviously, if it comes down to the yearly open close down here at 14K, 15K, I would just want to go all in or just go in. If it hits the 300 week moving average, even when it hits here, I want to get a bounce here. But we're under the 200. This was a meme. I mean, we're above 19. Where is this? The weekly close right here at basically 1900. Hit the weekly close 1900 and then bounced twice. Pretty solid. So I think having a long bias is okay. But macro, I'm still bearish. Short term, I'm bullish. Long term, I'm bearish. I would rather see it come up more than fall. So I'm gonna leave this here because I don't know. I want to make more educational series, more educational videos, as opposed to just doing this market update now, like looking at this, because the educational stuff will provide so much more value. So I'm gonna start working on that a lot more. And with saying that, I'll see you in the next video.